Today, I'm really excited to be sharing with you my top 10 strategies for financial resilience. I don't think there's ever been a time when it's been more important, perhaps in the last 30 years or so, to be as financially resilient as possible, with so many different red flags coming about the possibility of a recession, the craziness in the stock market, issues with global tariffs, potential issues with the bond market that we're watching. There's just so much going on right now. And so I wanted to share with you just some timeless strategies that will really help you shore up your financial life. And please let me know, what are your tips? I would love to hear from you in the comments as well. So let me know down below as well. I'd really appreciate that. So my number one tip for financial resilience is to build multiple income streams. I think if you've been here long enough, you probably could have predicted that was going to be my first one, right? But it is so critical to not have all of your expenses coming in from one person's job or from just one place, and have the rest of the family perhaps depending on that person, and then have something happen to their job or their ability to work for a while. Something happen along those lines. It's really key to have money coming in from multiple sources so that you have money to fall back on that's coming in consistently, even when maybe one paycheck turns off, hopefully temporarily, but turns off for a bit. Very important to have that. So multiple income streams is my first thing I always recommend. This can be money from your day job. It can be money from a side job that you have. It can be from selling on platforms like Etsy, like the one I sell on at my business, which I will put up on screen. Just anything that you can think of, really. It could be income from rental properties if you happen to be lucky enough to own a property that you're renting out. It could be income from investments, from dividends on those. Just anything that's coming in consistently every month, every couple of months, is something that you can count as an income stream. So important to think about that way. How creative can you get? How many different income streams can you have coming in for yourself and your family? My second strategy for financial resilience is to carry enough of the right types of insurance. So I come from an insurance background. I used to work property insurance back in the day and auto insurance. And it is very interesting to see how many people just really don't understand how critical insurance is. I think a lot of times when I hear people talking about it in casual settings, they'll just complain about how much their premiums cost for their homeowners insurance or their auto insurance, and try to find ways to cut corners on that. And while you obviously don't want to be overpaying for insurance, you also want to make sure that you have the right kinds of insurance for you, for your family, and for your situation. And that's going to vary. So it's really good to find a good insurance company and a good agent at the company to speak with, to just go over your whole situation. When I was working insurance, we had what were called umbrella agents who did umbrella insurance, and they tended to be the highest trained insurance agents there. They could help you with your homeowners, your renters, your auto, umbrella insurance, which is general liability. So if you call and ask to speak to an umbrella insurance agent, they'll be able to probably be a little bit more knowledgeable. So it's kind of like an insider's hack on that. But there are so many different types of coverage, right? We've got health insurance, which is obviously a biggie in the United States, with the enormous premiums that are very hard to save any money on when it comes to health insurance. So that is just such a situation that I really hope to goodness in the future we're able to find more affordable solutions to healthcare that don't bankrupt people just paying the premiums alone. But you've got your health insurance. You might want to look into disability insurance. Should, God forbid, you get disabled, it's basically like income replacement for yourself. Look into life insurance. Obviously, I'm sure you've heard about life insurance. The earlier you can get your life insurance, the better. I was fortunate enough to purchase my life insurance in my 20s, and my husband got a policy as well at the same time. And even though he's in the military, and so a lot of companies won't insure us, the company that we went with was able to offer us life insurance, and we got great rates just because we were in our 20s, even though he has, or at the time had, what was considered a hazardous job. And so it's really key to have that, particularly the more hazardous your job or your partner's job is, the more important it is for you to have that life insurance just to take care of anyone you leave behind, particularly if you have children, so it's not a financial crisis on top of a huge loss should, God forbid, something happen to you. Auto insurance is something you're probably familiar with. Homeowners and renters insurance, I'm sure you've already, had before and dealt with before. And then personal liability insurance, which we talked about, is typically what umbrella insurance is. It kind of covers if somebody should say slip and fall in your driveway and break a leg and sue you, you're going to have your umbrella coverage for that, your liability coverage. Also, if you're a small business owner, please buy business insurance. It is very, very important. The number of small business owners who run around out there without any business insurance at all is quite scary. So if you are a small business owner like myself, check and see which companies offer the right types of coverage for your business and which types of insurance you should buy for yourself to make sure you're covered while you're working as well. Obviously, if you work for a company, corporation, and so forth, they take care of that. You don't have to worry about it. So insurance. The third thing that I always recommend is to maintain a diversified investment strategy. Now, I've been watching my portfolio the last couple of months with the craziness that's been going on in the markets, and it's very, very interesting watching it as the markets have been doing these nosedives and climbs back up and nosedives and climbs back up the last couple of months around the tariffs and everything. It's been interesting to see how well my personal diversification strategy worked. So it's really interesting. I invest on E-Trade. And again, be advised that when you're investing, you can make money, you can also lose money. You already know this. But it's just something that you really want to do your homework on. But when you have a diversified portfolio, what happens is that, let's say some of your investments perform well, others might be performing poorly, and you're going to hopefully shoot the middle zone of still having some rate of return with your portfolio. And so it's just really, really key to have that and not have everything in, like, let's say you put all your money in your portfolio into Facebook stock. Please do not ever do this. Or all your portfolio into Google stock. I don't care how good of a company Google is. I do not own my entire portfolio in Google. You never want to have your entire portfolio locked up in 1, 2, 3 companies, something like this. You really want it as diversified as possible. Then what E-Trade lets you do, and it's really, really cool, is they will let you run scenarios if you have an account and you trade there. They will let you run scenarios where you can see how well or not well your portfolio would potentially perform if there was a big stock market drop. And then also it helps you see what your risk level is. So it'll have a little gauge of like showing more risky to less risky. If I can find an easy way to put this up on the screen, I will. And so it really kind of helps you stress test your portfolio before we go through an event like what we went through at the beginning of April. And so it's really helpful to just keep everything as diversified as possible. It just helps you a lot more in the long run not to have huge losses in the way that you invest. The fourth tip I have for you for financial resilience is to streamline your lifestyle and standard of living. You know how much I love minimalism. I'll link to a really great book about minimalist living that I did a video on a couple of months ago. But it really is extremely helpful when you are working towards financial resilience to just kind of pare down how much you're spending on a day-to-day basis and how much stuff you have to keep maintained, and just kind of have what you need, have enough for what you need, but not having to keep around a lot of other stuff that's taking up money on, say, insuring stuff like boats or RVs or motorcycles or, some of these toys that you might use occasionally, but if you're not using them enough, there's probably not a good reason to keep them. Just all these different types of things that can kind of be a suck on or a drain on your day-to-day, month-to-month expenses. So have a look at that as well. The fifth thing to do, especially right now, is to budget carefully for rising costs. I recently just had to completely redo my budget monthly because of how much groceries have gone up and how much household goods have gone up. And I was getting so frustrated that I couldn't stay on budget. And I was like, what gives? I'm buying all the same stuff I used to. What is going on? And then I went and looked at all my receipts and realized that, well, the cost of all the same stuff that I've been buying for the last couple of years has just gone up astronomically. And I expect to see more of that and not less as we deal with potentially more inflation this year. We'll see about the tariffs. I know I'm curious to see how that all gets resolved. But that, you may as well just, I guess, at this point, plan that costs on stuff will continue to go up. So go back through your budget, look and see what has gone up, and just kind of make compensations for that, so that you're still on budget as much as possible, even with rising costs of groceries and all these other things that we need. The sixth tip that I have for you for financial resilience is to stay on top of credit card debt. I know this is easier said than done. So if you're carrying credit card debt, don't worry, no judgment from me whatsoever. A lot of people right now are having to use their credit cards just to make it through their month-to-month expenses. So it is absolutely fine. Main thing is, just as much as possible, it's going to really help your financial resilience if you're not having to make a lot of expensive interest payments on the balances you're carrying on your cards. And so it could be that you've got a lot of money on those cards because you had a couple of unexpected expenses, and then just cost of stuff has been running more. And that's why you're paying interest charges, not that you're buying a bunch of stuff that you don't need. I feel like there's a lot of times people in the finance industry, I see colleagues of mine on LinkedIn and elsewhere kind of talking bad, talking smack about people who have credit card debt. And it's like, well, these days, just with cost of living and the fact that people's incomes are not keeping up with them, yes, it's ideal not to have credit card debt at all and to use credit as a tool and be very, very judicious with it and not run balances, but life happens. So just do your best as much as possible to keep your balances paid off, keep them low, utilize like the amount of, I have a couple videos that I've made on credit utilization that I will link to in the description box, but try to keep the, like when you look at your credit card, you'll have a maximum balance that you can run on that card. Let's say it's $5,000. Try to keep it at half or under, so $2,500 or less in terms of charges on there, just because that will help you not ding your credit score and also hopefully not incur finance charges. But ideally, get rid of the credit card debt because it's just one less thing on your plate, right? But these days, if you're using it to keep your life happening, do what you got to do. The seventh tip I have for you for financial resilience is to maintain a strong emergency fund. So this is also getting harder and harder to do with cost of living being what it is. I saw a article a while back that said that people had kind of run through a lot of their savings during the pandemic and came out of the pandemic and were just starting to recover. And then we hit this period that we're dealing with now of a lot of uncertainty around tariffs and costs of everything potentially going up by a lot. And people are feeling very stressed about it. So depending on kind of where you are, just try and see if you can identify your core expenses, which should be your housing expenses, food, transportation, health costs, things like this. And then see if you can just put aside 1 month extra just in savings, just 1 month, and look at finding what's called a high yield savings account that typically, I think mine's running 4.25% right now over at Morgan Stanley through E-Trade. But just find a high yield savings account, put aside 1 month of essential expenses, and then you know that if something comes up and you get laid off or something happens to your job or something happens to your ability to work, you have a month's worth of cushion. And then just keep building that a little bit at a time. Ideally, you're looking at anywhere from 3 months to 12 months of your essential living expenses. So do your best to kind of see if you can't get out to that 12-month zone, and keep that in a liquid fund that's easy to get to if you need it, that's not on the stock markets, that's not anywhere where it's locked away in a CD where you're going to be penalized if you need to pull out of it acutely. I like high yield savings accounts a lot because you don't get any penalties when you need to use that money for something else. But that's really, really key, is to keep that 3 to 12 months of living expenses handy, because again, with all the volatility that's going on, it may get to the point where it's affecting people's livelihoods, and people may be, experiencing times where they're in between work, and it's really important to have that padding. Eighth thing is to prioritize tax efficiency. This is something that I get a lot of comments from you all about, talking more about tax efficiency. And it's something that I'm definitely going to be learning more about myself. I'm not a tax advisor, so it's definitely not my wheelhouse. But many of you often mention that it's a very important thing when you're working towards financial independence to have a very efficient tax strategy. So my best advice to you on this is, if you don't already have what's called an IRA or an individual retirement account, go ahead and open one. E-Trade is an easy place to open one if you don't already have one. It's completely free. This video is not sponsored by E-Trade. It's just the platform I'm most familiar with using. And then you can put a certain amount every single month towards that fund, and it's all tax-free in a traditional IRA, so you don't get taxed on it for that year when you go to file your taxes. There's different kinds of IRAs. There's something called a Roth IRA where you get taxed going in, but then when you pull the money out in 40 or 50 years, it's all tax-free. There's health savings accounts. There are all kinds of different types of accounts that can help you pay less in taxes and still be putting aside money for your future. Check in with a good tax advisor on that, because that is probably the best way to figure out what's going to work best for your unique situation. Number 9 is to invest in your skills and education, okay? Invest in you, because you are the best investment that you're ever going to make. Whether that's in your health, whether that's in your skills in your current job, whether that's reskilling into a new job, you are such a great investment, and you have potential that you haven't even tapped into yet. And so it is really amazing these days with the amount of access we have to everything on the internet, with YouTube and with all the resources that we have online these days, different podcasts, just completely for free. You don't have to spend a dime, and you can learn so many new skills. And so I'd really highly encourage you to prioritize investing in yourself and keep investing in yourself as time goes by, because the investments that you make in yourself are something that no employer can ever take away from you by firing you. So even if you are in a very skilled position and then get let go, it's not going to affect how you feel about yourself, because you won't have been investing in your skill sets for that company. You've been investing in them for yourself. And I think that that's a really important thing to know, just as people have had a lot more job insecurity and layoffs in the last, 5 years now, that we've had a lot more fluidity in the jobs market, and people who thought they were going to do a whole career with a company suddenly, finding out they weren't going to, or lately with the federal government planning to do an entire career for the Forestry Service, for example, and then just getting cut without notice. So it's really, really key to remember that you are investing in yourself. You are your own best asset, and it is not a reflection on you if you get cut by your employer, and your new employer will be very fortunate to have you. Or if you choose to go work for yourself, you will be fortunate to have yourself as the CEO of your next business. Then the 10th thing here with financial resilience that I like to emphasize is keep your legal documents updated. This is something that I recently went through with my family attorney a couple of years ago, and we got all of our documents updated because they frankly were rather out of date. And what we did is that we set up something called a living trust. So a living trust is basically a legal entity that kind of covers everything. It covers your will, it covers your health directives, your powers of attorney, all these different things that are important to have, kind of should God forbid anything happen to you, just to keep your affairs really organized for the ones you leave behind for your loved ones. And then the nice thing about a living trust is that having everything organized like that, we've even got our home titled under the trust, so you can do that with your other physical assets as well. Is that then when you go through the whole legal process normally that you would go through if, God forbid, you passed away, called probate, when you have a living trust, you can skip probate, which is nice because it saves you a huge amount of time. Well, not saves you, but it's going to save your loved ones. They will thank you. It saves your loved ones a ton of time and money and energy and stress when they're dealing with a big loss, and then they've suddenly got to deal with all the administrative headache that comes when you're settling someone's affairs. You kind of do it ahead of time, and then your lawyer knows exactly what to walk through after the fact. So a lot of people are a bit superstitious about having wills. They think that, oh, if I make a will, maybe that means I'm going to die or something. Trust me, with my spouse in the military, we have had to have wills and power of attorneys and medical directives since we were 22. So it's really, really key, especially the more dangerous your spouse's job is, the more dangerous your job is or at risky, type of work that you might do. Especially if you have children, please make sure that you work with an attorney and get a will done up at a minimum so that your loved ones know exactly what your wishes are for your children that you're leaving behind, so your spouse knows what you wanted. It's such a thoughtful thing to do for the people that you're leaving behind, rather than leaving them in the lurch and having them just guessing what you wanted. And sometimes that can cause big family fights if it's guessing about what you wanted to do with your money, and maybe you have a lot of money, and it could cause like a war with your remaining, your surviving loved ones, and that's the last thing any of us want. So very, very key. I would really encourage you to work with a good family attorney to get all your affairs in order, no matter what age or stage you're at in life. And if you've already checked that box, well done you, and that's fantastic. The 11th thing that I like to think about, and now we're getting into the bonus points because I've got 2 bonuses, and thank you so much for still being here if you're still watching. I had so much to share in this video, and I have so much to share with you going forward the next couple of months through the rest here of 2025. So thank you for being here. But bonus tip here is safeguard your digital financial security. So to set up 2-factor authentication everywhere. Make sure you've got that. Use strong passwords. You may or may not have already frozen your credit. So this is something that used to cost some money to do back in the day, and now it's completely free at all 3 credit bureaus. I will link to those bureaus down below. It's Experian, TransUnion, and Equifax are the 3 different credit bureaus. And so you can actually freeze your credit at any of these bureaus. All 3 of them is best. You can also do this if you have children who have credit in their name that needs to be frozen because they're minor children, for seniors who you might have power of attorney for loved ones that you're caring for, that you don't want them to be subjected to like elder financial fraud. You can also, with their permission, freeze their credit. So there's just a lot of really good ways to safeguard not just yourself, but also other people in your life who might be vulnerable in that situation in terms of financial fraud. But it's a really nice, easy thing. And then once you've frozen your credit, all that means is that you can't take out any loans or open a new credit card or anything until you take that freeze off. And obviously it's great because that way nobody else can open credit cards in your name either and go to town, shopping. So it's really an easy thing to do, doesn't take too long, and then it's free to take that freeze off and on if you do need to go, say, get a new car loan or something. And then my final point to you here is avoid new debt when at all possible. Now, debt is kind of the way that we make our lives roll these days. Unfortunately, fortunately, we could get into another whole conversation around debt, but it's a tool that we use to buy our houses, buy our cars, educate ourselves, educate our kids. Sometimes we have to take out loans for, just a whole wide variety of different things. However, if you can avoid it, try to just like steer clear of taking out loans right now, because your situation is going to be very unique and different from mine. But we're in this whole situation where there's a lot of financial volatility right now. Interest rates are not at all-time highs by any measure. They were a lot higher, say, back in the 1980s, but they're definitely the highest that we've seen in the last 30 years or so. And so interest rates are high. You're going to be eating a lot in interest payments. And then also you're agreeing that you're going to have all that money to make all those payments on, say, that new mortgage for a very long time. So if you do choose to take out new loans, just make sure to speak with a good financial advisor, make sure that it's the right decision for you and that it fits with your overall picture of where you're headed with financial security and financial independence. I would say the lion's share of people, my colleagues on LinkedIn and elsewhere who I speak with about financial independence, are all on the same page about avoiding credit card debt and credit card balances as much as possible, even if you use credit cards, and avoiding loans, just trying not to take out loans. Now, there are times when it's almost unavoidable and you have a really solid reason why you need to. And I think that's a different scenario than taking out a loan for a new sports car just because you feel like it. Obviously, 2 very different situations. So you do, again, what's best for you in your situation, but it's a good time to just be cognizant of perhaps this being not a great time to take out loans, mostly because the bank will take advantage of those high interest rates and you'll be losing money and then be making a lot of money off of you. So it's generally a more favorable climate to like borrowers when those interest rates are lower, the way they were, whatever the past, 15 years or so when we enjoyed lower interest rates. But I think it's going to be a while before we see those low interest rates come back. So just to quickly recap, my 10 points for financial resilience plus those 2 bonus tips were build multiple income streams, carry enough of the right types of insurance, maintain a diversified investment strategy, and that can be on and off the stock market and depending on what you like to invest in, streamline your lifestyle and standard of living, budget carefully for rising costs, stay on top of credit card debt, maintain a strong emergency fund, which we said was 3 to 12 months, but at least a month's worth, whatever you can, pull off right now is fine. Prioritize tax efficiency. And again, great conversation to have with a tax advisor. Invest in you, invest in your skills, your education, your health, your well-being. Keep your legal documents updated at a minimum, get that will put together by an attorney. And then safeguard your digital financial security and avoid new debt when at all possible. Thank you so much for watching and for joining me here. We are at over 600 subscribers and I am on a mission to get all of this information out to as many people as possible. So if you haven't subscribed already, please do so. Click that notification bell so that you don't ever miss a new video, and leave me a comment about the ways that you're finding that work for you to be financially resilient and share that with our community. I would love to hear from you. Thanks so much, and I'll see you again soon.